Apex Frozen Foods reported a promising set of numbers in Q1 FY23. The business is making good progress as supply chain bottlenecks seem to be easing and volumes are also improving on the back of continued strength in consumer spending coming out of the pandemic. Q1 revenue was up 39% year-on-year thanks to healthy growth in both value and volumes. Buoyant consumption trends and improved availability of containers aided the processed shrimp exports across all the geographies. Total shrimp sales for the June quarter were up 15% year-on-year and 55% quarter-on-quarter. Average realization in Q1 was stable QoQ but improved significantly YoY on the back of a richer product mix, uptick in global shrimp prices and favourable currency movement. The share of value-added, high-margin, ready-to-eat products is on the rise and now accounts for nearly 25% of the total sales versus 15% in FY21. Gross margins expanded by around 280 basis points from the prior year owing to softening raw material prices. EBITDA margin rose 11.3% driven by operating leverage and stable employee and packaging costs. However, sharp jump in export-related expenses offset some of these gains. Apex Frozen Foods has a shrimp processing capacity of 29,000 to 40 million tons per annum, or MTPA as we call it, and this includes 5,000 MTPA of ready-to-eat products. The operations are backward integrated as Apex also owns and operates 3 hatcheries with a combined capacity of 1.2 to 1.4 billion specific pathogen-free or SPF seeds. The company majorly exports its products to distributors, retail chains, restaurants, club stores in the US, which contributes nearly 80% to its overall top line. Europe's revenue share stands at around 17 to 18% and the balance comes from China. As of Q1, the company is operating at a near 60% capacity utilization. With the easing of supply side challenges and ongoing correction in global freight rates, the shrimp prices have come down by 8 to 10% in recent weeks. In addition to that, Apex is also facing challenges in procuring medium and large-sized shrimps as farmers in certain areas have undertaken some premature harvests due to disease and floods. The company is well equipped to manage various economic environments as evidenced by the financial performance during the various cycles. Apex has been able to maintain its operating margins around 9 to 10% despite sluggish demand, COVID disruptions, additional cost overheads, reduction in export incentives and surge in global shipping freight rates. The performance on the margin front has been quite noteworthy considering the challenging operating environment that the business has witnessed in the past 3-4 years. Given the prolonged period of stock underperformance and impending upcycle in the shrimp sector, we had suggested Apex Frozen Foods in our top Diwali picks last year. The business is performing on expected lines as concerns around tepid demand, shortage of containers, high input prices that surrounded the industry in 2020 and 2021 seems to be abating slowly, and the outlook for FY23 appears fairly upbeat on the back of stable consumption trends. Consequently, the stock has seen a sharp up move of around 30% in recent weeks. Investors should therefore look to accumulate the stock on dips as the current valuations of around 14.4 times FY23 earnings seem reasonable from a long-term perspective.